move closer to the center. Okay. Yep. And this one. A little closer. And there you go. And sleep.
So is Alpha dead?
Oh God, I hope not. Actually, I don't think it is dead, but I think where you have to go look for it has changed. I started my career in the 70s. Most of my career was dominated by the twin rallies of the stock and bond markets. And so alpha was achieved by simply tilting risk a little higher than the markets generally, and you could outperform. Today, the game has changed. I think alpha is found when you pursue capital gaps. Basically, when everybody else is leaving, you should be walking in. When capital is scarce, you have the greatest potential to earn return and to earn alpha. But it's a scary thing to do, particularly when most people have spent their careers riding the beta wave.
Right. Well, tell me a little bit more about that, right? So you grew up in this era where you just put on a little bit more risk, you did well. Now you have to shift a little bit.
Yeah, market beta provides the volatility, but it's not clear that in today's post-financial crisis world that you're going to be compensated for it. So just simply taking beta risk in and of itself is not going to get the job done. So what is the other way that you can earn return? Well, whenever capital is scarce, there's the potential for return. So instead of making broad allocations, the investment game has shifted to literally investment by investment, deal by deal. Where is capital scarce? Going in, understanding why it's scarce, and then figuring out whether you can be compensated for the risk that you might be incurring.
So now, is that your philosophy then in running
Yes.
trust?
What we do at the trust is that we do two things. First of all, we set broad themes, and our themes are not necessarily novel or unique. It's just what is predominating and persisting at the moment. And so as a result, we've become much more opportunistic in our allocations rather than strategically allocating to broad traditional asset classes. So an example of a theme is the growing middle class in the emerging markets. And rather than having a specific allocation to emerging markets equity, we identify the theme and then we figure out what is the best combination of investments to express that theme. A couple of years ago, we actually got out of emerging markets public equity and chose instead to implement through a combination of private equity and emerging market debt. And that worked out very, very well for us because subsequently emerging markets has been selling off very dramatically and we avoided that risk.
Other examples you can talk about? It's interesting with emerging markets.
Yeah, so the other aspect of what we do is exploit capital gaps. So after everybody got over the financial crisis and began going back into private investing, the venture capital funds started raising money. The US venture capital funds were able to raise gobs of money. Valuations got very, very rich, and it presented an additional risk because of that valuation. Instead, we invested in Israel. And one of the reasons why we invested in Israel is because everybody else was leaving. Why were they leaving? Because of the geopolitical risk. Yet, the advancement and sustainability of the State of Israel is one of Helmsley's missions, and so as a result, we have greater insight into Israel than perhaps the average foundation, and consequently, we were able to analyze that geopolitical risk in a way that maybe others couldn't.